Okay, so I get a lot of questions on why do I chart /ES, the S&P 500 future, and why don't I chart SPY or SPX? And the answer to that is that I do chart SPY and SPX, but I primarily focus on charting ES, the future itself, because of liquidity issues. And what I mean by liquidity issues is that the S&P 500 is the future is open throughout the night. It's open 23 hours a day, 5 days a week. So when the market closes at 4 p.m. Eastern, the future is still open to trade. It closes at 5 p.m. Eastern and reopens again at 6 p.m. Eastern. So from 6 p.m. Eastern, when it opens up, trades all throughout the night, 1 a.m., 2 a.m., 3 a.m., all the way throughout the morning from 9:30 Eastern, all the way again until 5 p.m. Eastern the next day, closes for an hour, reopens up again at 6 p.m. Eastern. So it takes an hour break. Now, throughout the overnight session, the market trades it has a lot of liquidity. There's a lot of traders trading it throughout the night. Decent amount of volume. I mean, nothing compared to when the market is open in regular trading hours, but the liquidity is really not an issue. You could easily get in and out. There's a lot of volume on the Europe Open, the China Open, etc. So you have a lot of traders around the world trading the future itself, and the future is what moves the market. If people are trading the future's going down, the market's going down. Now that's the case with SPY as well, but for people to say they're trading the S&P 500, they're trading the future. This is open throughout the night, so they're trading this. Now throughout the night, it's trading very thick. There's full-bodied candles. There's not a lot of chop. The candles look real. They look organic. I'm going to show you what SPY looks like. Again, that's because of the liquidity and the volume issue. Now, if you were to trade SPY, go to a 30-minute. I'll go to a 5. If you were to trade SPY, I mean, look at throughout the night. It's choppy. The candles are doji, small-bodied candles, no wicks on some of them. It's just a choppy mess. You have gaps. That's because of the liquidity issue. You have all these gaps. Look at these wicks. So it's just a mess in the overnight session. And what happens is that it skews our data for zones that form on SPY. Let me show. So this is the same chart. Let me zoom out of this. So again, on the left is SPY. It's the ETF. So it's a derivative of the S&P 500. It's an ETF, so it just pulls in all the 500 stocks. And if the future is going up, SPY is also going to go up. Future's going down, SPY is also going to go down. So SPY follows the future. The future doesn't follow SPY. So it's important for us to chart ES because of the stuff that happens overnight. If you were to look at SPY, I mean, just look at this chop. It's just not clear, organic. And then look at the volume. There's almost no volume in pre-market. Look at the volume bars down here. There's absolutely, it looks like zero volume down here compared to the session throughout the day. So like I said, you're going to see zones that are not formed because of this chop here, and it's going to skew our data for the regular time hours because of this chop. And you don't see that on ES. So that's why I look at ES and chart these overnight sessions, chart these daily sessions, because you'll see different zones on ES that you will not see on SPY. So I'm going to show you a weekly chart. Let me expand this. So we have a solid supply zone. We have a drop here, a base here, this green candle, followed by another drop. So this qualifies as a valid weekly supply zone. Extend it to the right, etc. If I show you the same weekly chart on SPY, now look to the left, you have a drop. You don't really have a base. You have another drop though. You don't have this green candle as you would on ES. SPY, you don't see that. Yeah, you could draw it. I mean, on this candle, it's not a green candle. It's not something I really would prefer, but it's even much higher than what this candle is. Again, we have a demand zone. We have a rally here, a drop here, a rally here. I mean, a base here. So this basing candle is a weekly demand zone on SPY. On ES, you don't see that. You have a rally, you have a base here, yeah, you have a rally, but this is not a red candle. It's still a demand zone, but I wouldn't really qualify it as a strong, valid demand zone that I would really go full size in. On SPY, you see that. So it's important to chart ES, it's important to chart SPY, it's important to chart SPX. Now, SPX is also different. SPX has no pre-market data at all. If you look at SPX, there's zero pre-market activity. You just see gaps throughout the overnight session. So again, you're not going to see zones that form in the overnight session as you would in ES. Look at this massive rally up. If you were to look at this on SPY or SPX without pre-market on, you're going to just see a huge gap in the chart. You're going to see where the market closed the day before, and you're going to see where it opened the following day. You're not going to see all this stuff in the inside. And what causes huge rallies to the upside and downside is these imbalances that happen in the overnight sessions. So if you're not charting pre-market, you're not going to see these massive imbalances because of the liquidity that we have in the overnight session on ES. Now, it's important that you guys understand this. This is really important because I mainly do chart ES because of the overnight sessions, but just because I'm charting ES doesn't mean you have to trade ES. You can trade any other S&P 500 related stock. anything that correlates, anything that's a derivative with the future, anything that's correlated with the S&P 500. You could trade the future itself, you could trade SPY, you could trade SPX. If you see ES coming into a supply or demand zone, let me just fast forward this. If you see SPY, if you see ES coming into a demand zone, I linked up my cursor. So wherever my cursor is on the right screen, it's going to be on the left screen. Wherever my cursor is on the left screen, it's going to be on the right screen. So let's say we see ES falling, right? I'm charting ES. I put this in the chat room. ES is falling. I'm looking for this 27.15 demand zone down here to hold. Now, you don't have to trade ES. SPY follows ES. If you look where my cursors are, ES is in a demand zone right here. Look where SPY is. It's the same price. The charts follow each other exactly. Instead of buying ES, the future itself in the demand zone, just buy SPY calls. It's simple. Just buy SPX calls. Buy SPY calls. So don't get scared or intimidated when I'm just posting charts on ES and not posting charts on SPY. There's a reason behind that. Again, come up to this supply zone up here, short SPY. Look where my cursors are. Same spot. You could have top ticked this right here. You would have top ticked SPY as well. Capitalize on the move down. These charts follow each other. So whenever I'm posting about a weekly, daily, whatever, intraday, 5-minute, 15-minute supply demand zone, if you see me charting it about ES, that's fine. Chart ES. Mark the zones yourself. Put them in your charts so you don't miss the trade. You don't have to rely on me saying if I'm going to get in or if I'm watching a zone. If you mark the levels I post, set alerts and watch the stock when it comes up to it. You don't have to sit here all day. Wait for the stock to come into the zone. If you see me charting ES, I'm watching this 27.15 demand zone. Mark it. Watch ES on one screen, on the other screen, or on your phone, on your laptop. Have SPY options up there. When you see ES come down to this demand zone, all you got to do is just buy SPY calls and you'll be fine. SPY, SPX, any S&P 500 related instrument is going to follow the future itself. Keep repeating myself, but it's a point that I just want you guys to understand and not get intimidated if you see me just charting ES.